I hope that you are good. I'm going to explain how to do the general ledger. We have done this activity in class, so this is just to put more emphasis on what we have already done in class. Okay, yeah, it's just to put more emphasis, and maybe if you might have forgotten some of the key concepts that were discussed in class, this is like a refresher, okay, to those concepts. So without any waste of time, so we are going to do the general ledger, the GL. We know that we post to the GL, okay, and we know that the GL is used to summarize information. Okay, how does it summarize it? Using T accounts. So this makes it easier for the business to be able to interpret the certain accounts in the business. So the journals do not really provide us with an comprehensive information for the business to be able to make meaning or to make choices. The only thing that the CPG and the CRJ provides us with is how much was received and how much was made, but it doesn't give us a broad idea on how much is left in each account, or how much sales were made throughout the month or throughout the year, so yeah. So the information given below was extracted from the accounting records of FNS retailers for May 2023. The business maintains a markup of 60% on cost. Okay, so we know how to calculate cost price, we know how to calculate selling price at this point, or sales or cost of sales. So you are required to do the posting to the ledger, bank account, capital, trading stock, sales, as well as cost of sales. Balance your ledger account. So 3 things that we are required to do, not actually 3 things, but you remember there's a 3-step process that we need to follow when we are doing a ledger account. So these are the 3 things that your ledger account should have. Okay, firstly, it's OPC. This is number 1, this is number 2, and this is number 3. What do they stand for? So OPC stands for open your account. So you need to open your account. Let me expand this a bit. You need to open your account. Okay, these are the opening balances. You need to post to your account. Okay, but posting to your account meaning you are transferring information to that account. So the information comes from the journals. Okay, so in the journals, if there's a transaction that affects that particular account, you definitely need to post or transfer the information from the journal to that particular account. Okay, and then lastly, you close your account. Okay, close your account so that we determine the balance or that is left, or the total that is in that account. Okay, so I call this 3-step process OPC. Makes it simple. Okay, at least you are able to follow something. So the first thing that we need to make sure that we complete our accounts, the first thing that is required is information A. Okay, so in information A it says balances on the 1st of May. So we know these are the opening balances. So we have the first step. The first step is to open your account. So these are the opening balances for each and every account in the business. Okay, so we know for bank is 111,950, but take into consideration that they are telling you that the bank should be debited, the opening balance should be on the debit side, which is true, but we'll come to talk about it actually later on. So I want us to complete the opening of the accounts now. So let's go to our accounts. So we are given the answer sheet. Normally what I ask the student to do is just to label their accounts, because it makes it easier when you have to post, when you have to close, and so on and so forth. So the first thing that I want you to do is name or put each account under a category, their own categories. For example, we know that bank is an asset, so bank is under the category of assets, or some people might say elements in the accounting equation, or elements in the classification of accounts. So bank is classified under assets, so it's an asset. And then also a debit bank, some learners always say debit is always increasing and credit is always decreasing, which is not always the case. Okay, because of assets, yes, increase on the debit side, but it's not the same with liabilities or incomes or owner's equity accounts. So you have to be careful there. Okay, what you need to know is where your assets increase. Okay, so assets are debit natured. They are left-handed. That means they increase, all of them, on the debit side, and they decrease on the credit side. Okay, so how do I know this? We always do this. Some people use that click, liabilities, we have expenses, we have incomes. Okay, so we know that assets increase on the debit, they decrease on the credit. Owner's equity decreases on the debit, increases on the credit. Liabilities increase on the credit, decrease on the debit. Expenses increase on the debit, they decrease on the credit. Incomes increase on the credit, they decrease on the debit. So it's always, this is the case always. So I'm going to label all the accounts capital. It's part of owner's equity. It's the owner's contribution into the business, the owner's interest in the business. So capital, as discussed above, increases on the credit, decreases on the debit. And then trading stock is an asset. It's a position that belongs to the business and it has future economic benefits, so it increases on the debit, decreases on the credit. And then sales is an income made from selling goods. It increases on the credit, decreases on the debit. And then cost of sales, it's the cost of the goods that were sold. It's an expense because it has to be subtracted against sales. So increases on the debit, decreases on the credit side. Okay, yeah, I hope you understand that. So let's start with the opening balances. So I always tell the learners that the opening balances are always on the increasing side of each account, always on the increasing side of each account. So I know my opening balances will be on the positive side of each account. Okay, so that is the first step. But with bank can become, the balance can be negative or positive, depending on there's money in the bank or there's negative bank balance, or the bank is negative or unfavorable or unfavorable. So unfavorable means the balance will be located on this side. So we know that the bank balance is unfavorable if it's on the negative side. It's a bank overdraft. But this side, if the balance is this side, that means it is favorable, meaning it's a positive bank balance. So that is why they had to tell you where the balance is for the bank account. So that means the bank account is favorable. I hope you understand that. So let's put the balances in. So for bank, it's 111,950. Okay, but before we enter or input the balances, I just want you to look at something here. Remember, we have balance sheet account. Can you see this? Balance sheet account. This is balance sheet account. Okay, I say it. We have balance sheet account. Okay, and we also have, let me write it with, doesn't want to, okay, we have balance sheet account. Okay, and we also have nominal accounts. So you already know the difference, né? So your balance sheet accounts are your assets equals to owner's equity plus liabilities. So your balance sheet account will have liabilities, owner's equity accounts, as well as assets. Okay. And then what about your nominal accounts? Your nominal accounts will only have your incomes as well as your expenses. So don't forget this, né? Yeah. So we always balance this account, so this account can go on forever, meaning they're continuous. We always keeping track of this account. Okay, whereas with nominal accounts, we only look for the total. How much sales were made, how much did we spend for water and electricity, how much did we pay in rent, which is rent expense. So we always look for totals here. Here you want totals. We want totals here. Okay, here we are looking for balances of each accounts. You want balances. Everything has to balance here, hence we use the accounting equation, but that's a topic for another day. Okay, so let's open the accounts. Now that you know the difference, it's easier for me to show you how we open the account. So I'm going to use a purple color, which is my favorite. So we are going to open the bank balance on the debit side of this account. So firstly, you have to write the year. Okay, the year, as we saw above, is 2024. It's heavy, this one. Let me just decrease them. So it's 2023, sorry, May the 1st. So we have what we have, balance brought down. Okay, so this is how we represent an opening balance. The folio, the reference is that it's a brought down. When you write brought down under folio, you are telling us that this is an opening balance. No, it's an opening balance, and we always keep track of balances. Remember what I spoke about when you started balance. So it's a balance sheet account. Yeah. So what is the balance now? We said 111,950. This is the opening balance on the debit side of the bank account. Okay. Okay, and then let's go to capital, the next account. It's a balance sheet account. So which side? Credit side. Again, that's where the increasing side is. So you go to the credit side of our capital account. So it's going to be 2023. Okay, it's going to be May the 1st. Balance brought down. How much is it? It's 150,000. So it's 150,000. And then let's move on to trading stock. It's an asset, debit natured, so it's going to be 2023. It's going to be how much? Let me check. It's going to be 68,000. So there was 68,000 worth of stock at the beginning of May. So May 1st balance brought down, so it's going to be 68,000. Sharp. Done with that, and then we go to the nominal section, the nominal account section. So here you are looking for totals, ne? So you go to, you open the balance for sales. So here with totals, how we interpret them is that by the 1st of May, what is the total sales the business has already made? Okay, so we continue from that. So we use total brought forward, okay, with your nominal accounts, all of them. So the total brought forward for sales that we already made by the 1st of May is 127,700. Okay, 127,700. And then cost of sales, the cost of goods that have been sold by the 1st of May, 2023, May the 1st, 01. Going to write total brought forward. How much is it? 79,000. 79,000. So this is how we open the accounts. Okay, yeah. So in the next video I'll be discussing how we post. I hope you learned something. Thank you.